Hey guys, welcome to my Beyond Meat Q2 2021 earnings prediction video. So today I have a slideshow presented for you guys where I just go over what to expect from earnings, where some of their revenue could be coming from, my predictions in terms of whether or not they're going to have a loss this quarter, as well as some options plays I'm going to be doing as well. So if you guys want to mirror any of those, they're pretty risky options plays, but they are pretty, low risk for high reward kind of plays, because right now the options for August 6th in particular are very, very cheap. So you're risking a very, very small amount for a potentially big payout, especially if we get any unexpected, really good McDonald's news or just any other big partnership news that could send the stock soaring as high as 20 to 25 to even 30%. And just one last thing before I jump right into this, guys, make sure to tune into my earnings live stream, guys, that will be taking place probably a couple hours after this video is released. I will be live streaming around 4:30 to 4:45 Eastern Standard Time, and we're going to be listening to the conference call live. I'm going to be talking to you guys in the chat. Further ado, guys, let's just jump right into this video with the first slide. So here I have some key details to know. So Q2 of 2021 includes April 3rd to July 3rd. So any sales within that 3-month period will be included in their 2021 Q2 sales. So that means any new SKUs / deals released after that will not be included in earnings. So no Beyond Chicken Tenders and no Panda Express in these sales. But what that does mean, though, is that we will have July 4th grilling sales included because obviously people were buying up until July 3rd. So good to have those in there. Again, Q2 is typically Beyond's strongest quarter because of the summer grilling season. And here we have Wall Street's expectations versus Beyond's guidance that they gave. So for those of you who aren't aware, every quarter Wall Street gives their estimated consensus for revenue for companies and earnings for companies. And their consensus for Beyond's revenue for Q2 is 142.6 million. And their Q2 revenue for last year was 113 million. So Wall Street is predicting a 26% increase in revenue compared to Q2 of 2020, whereas Beyond Meat, they issued guidance in their last conference call of 135 million to 150 million in revenue. So they're predicting revenue in between 135 and 150 million, which would be a projected change of 19% to 32% from Q2 of 2020. So again, for those of you who aren't too familiar with how, earnings goes and everything, typically you want to meet or beat Wall Street's estimate, and let's say their revenue comes in at 135 million, that would be a miss in Wall Street's eyes because they're expecting at least 142.6 million in sales, which could cause negative sentiment amongst investors and cause a sell-off in the stock. So for Beyond, we really do want to see them make between 142.6 million and 150 million because we wanted to at least reach Wall Street's consensus. And here I list some new expansions / deals that will contribute to Q2 2021 revenue. These are just some news stories, guys, that you may be familiar with that I've covered over the past 3 months that should be contributing to their revenue for this quarter. So we have the 7,000 plus CVS store expansion that happened on April 13th. We also have the Pizza Hut Canada partnership that started on May 27th. We also have the KFC China plant-based beef wrap. These restaurant partnerships probably aren't going to be contributing too much, but they will be contributing to their international sales, which is important. We do want to see those continue to go up. We also have the Beyond Meatballs expansion to 300 Coles stores in Australia on June 6th, and multiple other expansions of SKUs across the US and internationally that I just didn't feel like listing here because there was just so many. And now we're finally getting to what to expect. So we should see a jump in food service sales with more restaurants / venues being reopened with vaccines being rolled out. Because if you guys remember, the vaccines, the general public didn't really start taking them until I want to say around March or April. So we should see a jump in restaurant sales. If that doesn't happen, then that would be concerning. We definitely should see a jump in restaurant sales. Retail sales should be great, like I mentioned with the summer grilling season before. International sales were up 186% year to date for Q1, so I would expect to see those to continue to grow as well with the expansions mentioned previously and food service partnerships as well. So yeah, guys, we should continue to see international growth. Retail sales should be really good because of the grilling season, and we should see a jump in food service sales as well. So obviously the question here is, will they beat on revenue estimates? And in my opinion, more likely than not, although it is possible they could slightly miss, as Beyond's guidance was between 135 million to 150 million, and Wall Street's consensus was 142.6 million. So yeah, just like I said, I'm kind of beating a dead horse here, but like I said earlier, we do not want to see them report anything below 142.6 million. Otherwise, we would see a slight miss. So what about earnings? Are we going to have another loss, another unprofitable quarter? In my opinion, probably. It's just a matter of how much this time around. And guys, just ignore these other two bullet points that I had. They're actually kind of irrelevant now because I was able to figure out their average expense increase per quarter. It's very unlikely that their expenses are going to stay the same for Q2 as they were for Q1. They are going to likely have an increase in expenses for Q2, and we will be getting into that in the next couple slides. So will expenses increase this quarter? In my opinion, yes. We've been in an upward trend of expense increases for the past 3 quarters, as you can see here from this chart. So yes, we probably will see this trend continue, and we will see an increase in expenses for Q2. And in this slide, I mapped out their average percentage increase in expenses for the past 3 quarters. So as you can see in Q3, they had 44 million in expenses, then in Q4 50 million, Q1 2021 57 million. So there's an average of a 12% increase per quarter for expenses, which a 12% increase from 57 million would be an estimated expense of $64 million for Q2. And with an average gross profit margin of 30%, you're going to see why that's important here in a second with the next few slides coming up. So what's the most realistic best case scenario? The best case scenario, in my opinion, is they meet or beat revenue expectations and have less of a loss. Less of a loss would be huge because it would indicate a trend reversal for earnings, because right now for the past 3 quarters we've had a bigger loss, bigger loss, bigger loss. We've been in a downtrend the past year when it comes to losses for earnings, so we definitely do want to see it kind of bottom out. We do want to see a spike up there because it is scary. Nobody wants to see a company just continue to lose more and more money with no stop in sight. Again, that's very scary for investors. So we do want to see them chill out a bit here with their loss. We do want to see a slight uptick. So that would be the best case scenario in my opinion. And here I mapped out some scenarios based on those assumptions earlier. So scenario 1, worst case scenario in my opinion, would be on the lowest end of revenue of 135 million with a 30% margin. That is a $40.5 million gross profit. With $64 million in expenses though, that brings it to a $23.5 million loss, which actually with this worst case scenario, that technically would be less of a loss from Q1, because I believe in Q1 they had minus 24.5 million. So it technically would be less of a loss, although not by much, only by $1 million. But then we would have the miss in the Wall Street consensus for revenue, which would be very bad for the stock in that case. In scenario 2 here, we have the middle case. So the revenue of 142.6 million. This is if they meet the revenue right on the dot for Wall Street's consensus. We have a 30% margin, which would be $42.8 million in gross profit. With 64 million in expenses, that would be a $21.2 million loss. Again, less of a loss from Q1 of 2020, which is good. And it would be neutral that we just barely met Wall Street's consensus. So in that case, I would expect the stock to not do that much. And in the best case scenario, we would have revenue of 150 million with a 30% margin. That's 45 million of gross profit. That minus the 64 million of expenses gives us a $19 million loss, which would be great. That would be a great uptrend to start the reversal pattern for lessening the losses every quarter. That would be $5 million roughly less that was lost than Q1, which is pretty significant. So again, that would be the best case scenario because we would have less of a loss and we would have beaten Wall Street's estimate there with 150 million. So just some scenarios there, guys, that I came up with. We will see which one plays out, if any of them at all. Yeah, going to be very interesting for that. And coming up to the last few slides here, guys. So what we want to see, this is an example of what we do want to see for their earnings. So we do want to see that slight uptick in less of a loss, which again would indicate a reversal in the trend of the downward trend, as you guys can see, that we've been in for the past 3 quarters. This is what we do want to see. And this is what we don't want to see. We do not want to see a bigger loss. This will just make investors worried again for another 3 months until their next earnings. And it just would not be a good situation, guys. We most likely would see a pretty big drop in the stock price if this were to happen. So coming up to the end here, what am I doing, guys? So worst case scenario, if the worst case scenario plays out, I'm just going to be holding / buying the dip. Because as we know, the story hasn't changed. BYND is still a great product. They're still expanding rapidly and they're still getting all these partnerships and all these deals. Not to say that I wouldn't be worried if we did have a bigger loss this quarter. I definitely would be, but I know the story hasn't changed, so I would continue to buy the dip cautiously. But if the best case scenario plays out, I am also going to continue holding and also continue to dollar cost average, which if you guys don't know what dollar cost averaging is, it is the best strategy for investing. Every month you just throw in a certain amount of money no matter what the stock price is, and that way you get in at a pretty decent average price. So again, those are my strategies with the best and worst case scenarios. And now we're going to get into my options plays that I'm doing. So again, guys, not financial advice. I'm just doing these purely for fun. I do them purely for fun every single earnings because it would be really fun to hit one of these. So calls and puts expiring August 6th. They're very, very cheap right now. So I'm playing both sides in case they do hit and they do miss with a call and a put. I only bought one of each. Again, I'm not risking that much money. I'm risking like 60 bucks on this, but the upside potential is pretty huge. If I do hit one of these, then I will be making anywhere between 400 to 500 bucks, which in my opinion is pretty worth it for the pretty low risk entry price. So I bought one $150 call and one $100 put. So I'm expecting a volatility of plus 20% or minus 20%. So if you guys want to mirror these plays, again, I put this video out before the market close, so you should have time to do that if you catch this video soon enough. Again, very low risk. I believe the 150 call is around like 25 cents right now, so like 25 bucks for one call. And I believe the $100 puts are around like 45 bucks. Again, I just bought one of each just for fun. You guys can see me win or lose money live. So again, it adds another dimension to the live stream experience. You know, I'm not only here to, educate you guys with the news, but I'm also here to entertain. I like to entertain people, so hopefully that will be a very entertaining live stream in that sense, and I will be communicating with the chat as well. So again, please do tune in around 4:30 to 4:45 Eastern Standard Time. And with that being said, guys, that's pretty much it for this video. Make sure to leave a like if you enjoyed it, if it was helpful, and yeah, I'll be seeing you guys in the next video. And those of you who are going to check out the live stream, I'll be seeing you in a couple of hours.